Welcome to another episode, Focus in Finance. Shirley Luu, I am your host. The last segment you guys saw a week ago was, of course, I had wonderful Roderick Johnson sitting here next to me, and you know what? I had to have him back. The reason I had to have him back is that we didn't finish our conversation, and I thought it's important to know. The last time, for those of you who had missed the episode, Roderick Johnson is President CEO of RLJ Financial Consultant, and it's amazing at what he does. So, Roderick, welcome to the show, and why don't you tell a little bit about yourself to this audience?
Yeah, thank you, Shirley, and good morning, everyone. At RLJ Financial Consultants, actually, we provide business and personal insurance as well as commercial lending brokerage services. Now, with the commercial lending brokerage services, I like to say that we burst open the vault doors of local banks so that they can pour money into local, growing, and profitable companies right here in the DMV. In terms of insurance, on the business side, we offer business liability, professional liability, workman's compensation, directors and officers, and key man life insurance. And then on the personal side, there are all types of insurance products that we offer, like whole life, universal life, term, and IULs.
Wow, you sound busy. Well, you know, one of the things why I love to partner with Roderick is because he's at the heart of working with business owner out there and a lot of folks, and even with individual you and I. So, you know, right now, you and I know for the past couple months, there's been crazy turmoil in the marketplace. Federal jobs, needless to say. Then you've got unemployment. And even to be honest with you, my daughter graduated from college, right? And she's like, Mom, where are there jobs out there? Because everybody's like, you know, fighting for the same thing, no experience. But what are you facing right now with employees leaving companies? And
All right. Well, as you know, there's the phenomenon. So federal employees are losing their jobs.
Right.
They are concerned because, generally they lose their benefits. So they don't have health benefits, they're losing their insurance, right, the term insurance, but most importantly, the returns that they're seeing in their TSP, either they're showing negative returns or maybe at best a 2% return in that L fund. And so people are, you know, they're really concerned about losing value in their TSP. On the corporate side, people are worried about their 401, the drop in their 401k, their 403b, their SEP IRAs, and they're just really concerned about this. And they're saying, what can I do to mitigate the losses that we are now incurring in our retirement accounts? Just this morning in the Wall Street Journal, on the front page, it talks about how the market has dropped another 25%. It's very alarming out there.
You know what, I don't know if you can remember, but the 2008 crisis, do you remember that when people were losing like 40% of their portfolio? Hey, guess what? That could be coming, guys. Okay, why am I telling you this? Am I telling you this to scare you? No, I'm telling you this to better be prepared in case if it does. Now, can you avoid it? The answer is yes. And you know,
one of the things that I've been talking about, because a lot of the employees, particularly on the federal government side, tend to be a little older. Okay. And so they may be between ages of, I'll say, 55 and older. And so one of the things that I've begun to talk to them about is, have you thought about an annuity? Okay, the 3, 5, 7 year, 10-year annuity.
Oh, but guess what? No. There's a lot of folks out there say, oh, annuity are bad. You know that, right? You got these other firms out there that are fighting against us, talking to this on TV. They say it's a bad thing. You know, and why do you think they say it's a bad thing?
Well, one of the things they're talking about, well, there are a lot of fees associated with annuities. And are annuities really safe and guaranteed?
Right.
So, for example, we know that our deposits, right, in a bank is insured by the FDIC.
Right.
Or if we have an investment account up to about, I think, $500,000, then it's covered by the SIPC. And so if our money is in an annuity, how do we know that it's safe?
Yeah. So every contract when you get it, it's in writing. Under the regulatory of the IRA and things like that, which, the TSP, the 401k, once you convert it to a IRA, it's protected under the Guarantee Association. And by the way, that's regulated by every state level. All 50 states participate in that. So banking have FDIC insure under the insurance regulatory, annuity and IRA and all that goes under the Guarantee Association. So that document has certain dollar limits up to where it's guaranteed if a company go down under or if something happens or any of those things. So that's a guaranteed safety net for those of you who worry about. And I know for a fact that I mentioned earlier to them, well, yeah, what if I told you there's a plan out there you can't lose? Well,
Well, Shirley, when they talk about fees for the annuity, one of the things that I bring up is for some of these annuities, they're offering a 10% or 14% kicker up front just to sign up. So let's just say that the fee for the annuity may be 1.2%. Well, if you're getting a 10 or 14% kicker to start, then that 1.2% fee is already covered.
I know. And did you hear what he just said? Imagine if you get an account that has a bonus on it, they're giving you on top of it, okay, so that helps cover your fees. And so is that a bad thing? But then again, you mentioned earlier, there are a lot of annuity out there, IRA account, there's no fees. So it depends on what exactly do you want, from your account. You want a stream of income? You want higher guarantee rates? Yeah, if you want a high guarantee rate, you may have to pay a fee. But if you want a flat 4 or 5%, there are no fees. There's a lot of so it depends what you want.
Now, one of the other things that I mentioned about the annuity is that you can now convert that annuity into lifetime income.
How does that work?
Right?
Tell the audience, please.
And I talk about annuitizing. Now, you may talk about, there's a rider that you can put on.
Right.
That you can actually
turn
that rider on. And
I like the rider.
Right? Okay. And turn that rider on, and you can have lifetime income. And then once you transition, then your beneficiaries actually inherit that money.
Yeah. So I like using the lifetime income instead of annuitizing it because the lifetime income, you're getting a promise of guaranteed payment forever until the day you die, first of all. And second of all, Roderick, what he said to you was, if at the time, let's say if I die at age 90 and there's still money left on my IRA account under the contract value, then my beneficiary does get the rest of the money. So it's not like your family losing anything else. I live for a long time, I have money forever. And if I die unexpectedly, my family gets the money. And if, God forbid, some of these IRA account out there has a feature where you can't perform 2 to 6 activity daily living, then that particular income that I've been getting doubles.
Yes. So, for example, you may have $30,000, and now it doubles to $60,000.
Yeah.
Okay, that can go toward cutting down the cost of whether that's an assisted living facility, a nursing home, or you have someone coming in and taking care of your loved one or yourself.
Oh, there's another thing they don't know. For those of you guys who are married, you want to hear this? If you're married, partner, spouse, here's a magic thing. Did you know under some of these accounts, let's say you have not turned on the income yet, and let's say, Roderick, if you are married and your wife is actually sick, not you, your wife, and he has not activated the lifetime income yet, instead of getting doubling the money, did you know the wife now can get time and a half of the money? So remember that $30,000?
Yeah.
She can get $45,000. And it's interchangeably between husband and wife. So if the wife has an annuity and you're the husband and you run into that situation, guess what? You get the time and a half.
Yeah.
How many accounts out there does that, guys? It's amazing what it does, and you can have it as joint, and there's just so many ways that you can design this plan,
Yes. And here's the thing. With the annuity, you will not lose money. Okay, as we stated before, you can have right now there's a product that some of the insurance companies are offering where you can get 9%, 14%, okay?
Wow.
Which obviously is outperforming the market at this point in time. So it is a viable option for you to look at annuities as protection, okay, for the money that you've earned and worked so hard to save for your retirement.
Yeah. Look, in life, what you need to do, you need to do a good evaluation on your financial planning. You know, there's always two sides to the story, so don't let anyone else distract you. And the other thing, the biggest connotation recently is that I hear people say, oh, okay, Shirley, the stock market been down, so they've been telling the whole world out there, stay put, because it's going to go back up. Let me tell you one thing. Yeah.
Yeah, all right. So one of the things I just heard the other day was, oh, well, I can still invest in the market, and it's called dollar cost averaging for the stocks, for each of the stocks that I purchase. Well, yes, you can do that. But why do that when you can earn a higher rate of return on the money that's put into an annuity?
Yeah. But even not just, you know, index stuff is really the way to go. So it's not just dollar cost averaging, guys. It's talking about the money that you currently have. Imagine if the market, and okay, if you're young, you may have time horizon, but when you're 60, you don't have that time horizon to recoup that money. You do not. You do not. Imagine if you lost $100,000 overnight. $100,000 overnight. Do you know how long it would take? That market has to make another over 100% to gain back your 100,000, right? So,
Yes.
I mean, if the market lost 20%, it has to gain back more than 20% to get back break even.
If you look at it, we had the Great Recession in 2008,
Yeah.
and people lost a lot of money.
Yeah.
It's just now in 2020, actually in 2024, where people were actually able to regain the money that they lost back during the Great Recession. So how many years is that it took for you to actually get back to where you were
I know.
before the Great Recession happened?
So my friend never recuperated. So Roderick, please tell them how do I get in touch with you?
I can be reached at 240-997-4024. I'd love to hear from you. Let's sit down together and devise a plan to make your future bright.
And again, you can reach out to Shirley Luu, L-U-U, and you can Google me, find me easily. My can be reached is 703-608-1203, Shirley Luu Associates. I always love ending with this quote. Remember, we rise by uplifting others.